All right. Happy Cinco de Drinko, everybody. Grab a drink, sit back and relax, and let's crack open some charts. All right. First things first, let's take a look at the performance because we have been absolutely crushing this market. And if you are in the Discord server, you know this is true. And right now you can see we're currently up 40% year to date. And if we just look at the start of the year to where we are now at all-time highs, as traders, all that we care to see is that our account is moving from the bottom left of the screen to the top right of the screen. And as I always tell you, we could not care less if the market is going higher or lower. All that we care is that our account is going higher. And sitting at 40% year to date, our benchmarks are an 8% year to date S&P 500 and a 5% for the year that we're looking at if we're just sitting in a money market. So it is without a doubt that we are absolutely crushing this market, up 40% year to date, and we're only in the very early beginnings of May. And if you've seen the members video, you have a very good read on this market, and so far everything is playing out very close to what I expected. But that doesn't mean we're just going to get complacent. We still need to be very vigilant, and we need to pay attention to every single day's worth of the price action and understand where we're managing our risk from. And so today I just want to do a very quick recap of the market for the week. Going into next week, I want you to be very well prepared. So today is just going to be a very relaxed look at the market. So get a drink, sit back and relax, and we're going to look at all of the indices as well as the market moving names, and we're going to try to get an idea of what we're going to expect going into next week. Now, one more thing I want you to reconsider is if you do not currently have a broker that is putting your money away into a money market while you are just sitting in cash, you need to go look at this immediately, because if you look at my account in Fidelity, all of my cash is held in a money market, and on Fidelity, that is this SPAXX account, and it is currently paying out 4.96% interest on all of my cash that is not invested into stocks. And this makes a huge difference month over month and year over year because we have very high interest rates right now. And these very high interest rates means that money markets are paying out damn near close to 5%, which means any money that you have that is just sitting around, sitting in a money market is getting dividends month over month from just sitting around being in cash. We have not had interest rates even close to this since 2007. So this is something that is very new to a lot of you. And if you're not taking advantage of this, this is something you need to go consider immediately. So if you look at something like Robinhood, if you are a pattern day trader, which I am a pattern day trader, I do a ton of day trading, they are not paying out any interest on your cash. So you really need to go make sure if you're a pattern day trader that you have a broker that is taking advantage of these money markets and that is moving your money into these money markets while you're not invested. And yes, this account that I'm showing you is a margin account. So it doesn't even matter if you're on a margin account. If you have cash that is settled, it goes and it's held in these money markets and it's making interest, and that is going to make a significant difference in your performance for the year. So I just wanted to make this as a public service announcement for all of you who didn't know this. Make sure you go look into this immediately. All right, so looking at SPY, we really only have one level we need to pay attention to this week, and that is the breakout above 507, because while we are above 507, we currently do have higher lows and higher highs on SPY, so that is a very bullish setup. And it's very difficult to say you should be bearish right now because as we are approaching this resistance, it's possible we blast right through it. And it's very easy to manage risk while we have the bull breakout above 507. And we did get a very bullish gap up. So we do have a gap to fill just below 506. So even if we get a pullback, again, we are looking for higher lows and higher highs as we continue higher in this bull market. Now, if we start to break down below 507, then you can manage your risk. And I always tell you to move like water, which means you should not be sold on any direction the market is currently going in. We're looking for the grander scheme of a trend, and right now this is a very range bound market, which means we don't have a strong trend going higher and we don't have a strong trend going lower, which means eventually when we break out of this range, we will be looking for a trend to return to this market. But right now we just don't have a strong trend. You can see that by all of these moving averages. They're very bunched up. There's not a lot of separation. They're basically all sitting at there right at the breakout at 507, and that's why I want you to move like water. While we're above 507, I think you should be bullish. And if we start breaking down below 507, it's very simple to get risk off. And remember, you are retail traders, so you can move in and out like water. You don't need to worry about these massive position sizes that a lot of big institutions need to worry about. So don't have a bias and don't care if we're above or below 507. Simply react to whether or not we're above 507. And that is really going to unlock the definition of not having a bias and following price action. So I'm going to keep it very simple simple for you. While we're above 507, I think you should be bullish. And if we start breaking down below 507, I want you to get risk off and expect us to be going lower. On the NASDAQ 100 triple Qs, we were up 2.01% on Friday. And on Friday, we had the bull breakout above 434. So just like SPY, I want you to move like water. And while we're above 434, I think you should be bullish. And if we break down below 434, simply get risk off. And we do have a gap to fill down here below 428. So it doesn't matter if we're going higher or lower, we couldn't care less because we're unbiased price action traders. Above 434, we're going to stay bullish, and below 434, we're going to get risk off. On the Dow Jones, we were up 1.19% on Friday, and again, we had a very bullish gap up. We broke above that resistance at 385, and I told you that above 385, it's possible that we go all the way up here to 395. So once more, I'm going to remind you to move like water. Above 385, I want you to stay bullish, and below 385, I want you to get risk off. And if we break below 385, we're looking for a gap fill down below 383, and while we're above 385, we're looking for a gap fill right around 395. On the Russell 2000 IWM ETF, we were up 0.99% on Friday, and we did have a very massive gap up, and we're very close to closing the gap above 204, but again, we opened another gap down here right around 200. So again, we're moving like water. On IWM, we're going to stay bullish above 200, and while we're above 200, we're looking for a gap fill above 204. And if we come down here and we fill the gap at 200 and we can't hold this support above 199 to 200, then we're just simply getting risk off. There is no reason we cannot move in and out very quickly here, so it's very simple to say risk off or risk on, and that risk level is going to be right there between 199 and 200. On the ARKK ETF, we were up 1.2% on Friday, and we did gap up, and we did hit a very critical resistance at the negatively sloping 50 EMA right around 46.5, and we do have a gap to fill down here right around 45. So for ARKK, you can stay bull above 45, but if we can't hold above 45, it's still possible we're coming down here towards 41 to 40. Above 45, we're looking for that very strong resistance right around 47. On the VIX, we were down over 8% on Friday, so the VIX did crush down below 15, and I told you if the VIX crushed down below 15, that would tell us that fear is leaving the market, and fear leaving the market favors the bulls to push and get the bull breakout, and on Friday, we did get the bull breakout. So now it's just a matter of whether or not the VIX can stay down below 15 and continue to crush lower towards 12.8. The VIX right now is telling us we're in a low fear bull market, and that's exactly the read that we've had on the market all year long. On Bitcoin, we're currently trading at 64,000, and this is a very important bounce because Bitcoin is bouncing from a very oversold condition outside the lower Bollinger Band all the way back up towards resistance right around 64 to 65,000. And if I zoom out here, you can see that Bitcoin continues to make lower highs as it's breaking down. So do not rule out the possibility that Bitcoin is just making another lower high before we go hit that price target at 52,000. And if we scroll to the left, you can see that there is absolutely no support if we break down below 61,000. So right now we are currently above 61,000, but if we break down below that level yet again, that is the level that I'm calling bounce or die. And bounce or die means if we cannot hold above it and bounce above that support, then we will die. And the die level is going to be down here right around the support at 52,000. So the only way I'm going to be getting bullish on Bitcoin is if we can break out to a new higher high, and that is going to be the break above 67,000. So I do suggest saying risk off in Bitcoin while we're below 67,000. On Nvidia stock, we're up 3.46% on Friday, and we did break out to a higher high, which was the break above 878. And I told you while Nvidia is continuing to make higher lows and higher highs, I do think it is going to make a brand new all-time high between 994 and 1032, and I do think that's going to happen before earnings, and earnings is only a couple of weeks away, so it's very possible while Nvidia is above this breakout at 878 that it's going to start to run. If we break down below 878, then we have a gap to fill right around 862, and we're staying bullish above 857. On Tesla stock, we were up 0.66% on Friday, and I'm still looking for a higher low in Tesla, which I think is going to be somewhere between 167 and 173, and from here I think we're going to push higher towards 207 to 225. So I'm staying bullish in Tesla above these critical support zones at 173 and 167, and I'm just going to get risk off if we break below them. And I do think this is a very bullish setup. We've had a very bullish impulse after the earnings, and now we're getting a little bit of a retracement to a higher low before we continue higher. If we break below 167, get risk off, and we do have a gap to fill down here right around 147. On Apple stock, we were up 5.98% on Friday, and Apple did exactly what I expected, which was a bounce off of a higher low at 168 and then a push higher to 187. Now we hit 187 and we closed that gap, and there's no reason to speculate on where Apple is going to go from here. We need a few more days to see what the price action does, and right now we just need to watch support at 182 and 179. This is a stock we've already taken profits on. The trade has already worked out, and we just need time for the price action to settle, and we need to get a better read on the price action to decide where we're going from here. So jumping back over to the S&P 500, I think this is going to be a very exciting month. I think it's going to be very volatile, and I still think bears and bulls alike are going to have great trades as long as you're focusing on the critical risk levels. I don't think you need to be extremely bullish just yet, and I don't think you should be extremely bearish still. In the grand scheme of the bigger picture, we are still in a bull market heading higher, but we're just dealing with a pullback. And the question is whether or not the pullback and the correction is over, or if we're still in the correction and this is just a bounce before we go a little bit lower. So know those critical risk levels that I gave you and follow price action and continue to move like water without a bias, and you are going to do very well in this market. If you want access to all of my intraday updates and technical analysis as well as my trade ideas, that's going to be in the Stock Channel Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.